Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Thursday, June 22nd, 2023. Well, it appears that we finally did reach the low or put in a low for the minute fourth waves that I've been tracking. And the move up off of this morning's lows here in the NASDAQ proved to be quite strong and productive in terms of building on what I believe will end up being a small first wave. So it'll be a small 5 waves up off of that low, which gives us some nice, not necessarily confirmation, but a nice support. And also, I guess, confirmation that that wave 4 is complete and that the market now will continue to head higher as it moves to complete the minor fifth wave and in turn the balance of the structure. So I'm just going to dive right in here. I'm starting on the 4-hour chart, and where we can see that I've placed the 4. And what I want to do is open this up just a little bit so I can go in, because the first thing that I'm going to do here, we have, this is the minor fifth wave. So those remain the same. And we can already see again that we've now exceeded the 0.618. And I just left it there as a point of reference, because what we look for here, and that comparing a fifth wave, the closest cousin you could say is the first wave. So, and then they're related and can be related via Fibonacci numbers, Fibonacci sequence. And the numbers would be that the first one would be equality. So I'm going to go ahead and put that up now. But we compare it. Let's see, that's 695, and that is 6. I'm going to go right there. That's where it is. And then we're going to go back over, and we go to the bottom here, and that is 93, and this one's 90. 964. So we're going to go right there because it was right at some nice support. And so let me just clean this up real quick. We don't need all this auxiliary stuff here. We'll leave that one, that one, that one. And we're going to go for 2.618. That's just the relationships. And we're going to put the right color on this. And then we're going to go bing. So what we can see is that because minor wave 1 or minute wave 1 was a lot smaller, well, in terms of the depth of minute 4 produces some low levels. So we're pretty much going to be looking at these higher levels for minute 5. And that's because of the depth of the minute fourth wave. So already out of play is 0.618. Already in play and being touched right now is the 100%. What's up next would be 1.618, and that's 15,400. Ultimately, though, we would be looking for it to break, for this minute fifth wave to break above 15,481, 482, right in that area. So what could happen if it gets up there and then reverses and comes, and would have to come slamming out of it. In other words, it would have to come down pretty hard. And for it to fail, I'd be looking for some type of a news event or something that would actually just reverse all the markets, basically. And in that case, this 1.618 could come into play. I'm not necessarily going to be looking for that because, again, like I just said, I'm expecting minute wave 4 to take up the high of minute wave 3, which is 15,475. So that leaves us to that cluster that we've had for quite a while, and now they are all matching up right inside of it. And so we have the minute wave 5 coming in at 2.618. That was the next multiple up. After if it were to break here, that would be the next multiple, and that is 15,670. And then we have the 100% for my minor wave 5 at 15,703. And then all the way out, we have 1.618 for the intermediate wave C. And that would be where intermediate wave C was 1.618 times the length of intermediate wave 1. I can add one more. And that's going to be the primary. And I need to actually go out one more all the way out to here. And those we just put in as retracements because it's the B wave is retracing the A wave. And so we'll go up to that all-time high. Let's go, we can go here. And we're going to take it down to the primary wave A bottom. And you can see that what we have coming up, really, because we've surpassed everything else, is we have the all-time highs, which is this is coming in at the wrong level. So let me go here. And yeah, that's where we want it. So I need to go right in there, and I need to change that real quickly. The end point. And $16,768. So bringing it back down to my 4-hour chart, we can see that it's sitting up there. But that, in terms of the primary B wave, that's our next level. And so if we could get pretty close, this throws us into a territory where we would be, if we go up too far, right? So we start going up all the way up into here, we're into irregular territory, where minor wave 5 would be 2.618 times like the minor wave 1. That's irregular territory. So again, right now, it's not necessarily what I'm looking for, but there it is. It does sit there. And we could figure in terms of the entire primary B wave, if it were to turn into an irregular, the Fibonacci's that go along with that are 1.236 and 1.382. Those are the most common. And those you can see are 18,250 and 19,168. Should it occur, there they are. We're covered in terms of we have fibs that take us up to that level, still within the context of a primary B wave. Now, we have seen them in the past on this larger level. Particularly the last one that we saw was in 2008, and it was in the Dow. And the Dow by itself, I mean, the S&P came close, but it did not move to a new high. But the Dow did, and it exceeded by a fair amount in 2008, followed by the great financial collapse of 2009. And so it was quite dramatic. So to think that it can't happen, and that was within the context of a cycle degree fourth wave. So in this case, it's a primary degree B wave. Still corrective in nature. So in other words, that's kind of like it'll happen, and it's happening within the B wave section of it. So we already have primary A. This would be primary B. It could be an irregular B, could be. We're not calling for it. We're just including it in the analysis, and that would definitively point to new all-time highs, whether it came via the minor fifth wave being 2.618, or if it comes within the B wave itself, which is be more likely. So then you can be looking for much higher levels. What's going to drive the market? Your guess is as good as mine. So I'm going to open this back up to where we are right now, looking for the minute fifth wave. We're looking for the development of the 5 waves up. And so we can hold this open a little bit to basically see that, well, we kind of got maybe a little up, going to come down. If we got a 1, 2, and then maybe a 3 and a 4 and a 5, that completes the first. So we're still going to see a defined 5-wave pattern up. Now, we're not out of the woods yet either, because for all I know this is all going to turn into something much different than what I'm counting, a more complex sideways move while the market digests and wait for whatever it needs to make its next move. So we'll keep an eye on it, but right now, as soon as if I can get the 5 up, again, on my hourly chart, then I'm looking for 3 waves down. Not a lot, not big, because it has to be in the context of the structure. And it would be wave 1, we get a little 2, we get a bigger 3, we get a 4 and a 5. We exceed that, we get up there, we finish the move. And again, too early to say whether something's really going to start to kick in and accelerate this move and get it well beyond our levels that we're looking at here, which takes us then up into the new all-time high territory. But remind you, it's got to get, this is 618, minor wave 5. Can be 1.618 coming at 16,492. Still not to new all-time highs. Dang close, and it still would be a primary B wave. Even if it makes new all-time highs, it's still going to be, in my book, a primary B wave. Okay, so continuation, I am looking for additional upside. I'm looking for an additional high above what we've seen thus far at for 15,475. Moving averages again starting to kick back in, and you see they all just kind of perk themselves up, and that is a good thing. Even the 20 kind of start to move back above the 200, and that's all good because, as we noticed, that a lot of them had fallen down and broken below, at least on our hourly chart, more in the S&P than it was here in the NASDAQ. So that's all now looking pretty good as well. Going over into the S&P, it spent the better part of the session here and there negative, and still not taking off much too hard, as the Dow and other markets did experience more downside versus upside. We'd be looking for the Russell to kind of also pick up the upside again. So, and as I've discussed prior in the Russell, it has actually been forming a triangle. And that's where its B wave is going to be, is looking very cleanly that it's going to be a triangle. So I would not be expecting new highs in the Russell. We just got to take the market well above 2,000. I think it may get close, but not to new highs. I don't think that the S&P will be moving. There is a possibility, but we would be thinking that this 5th wave is going to extend in the same fashion as the 3rd wave did. And that's just unknown right now, but it could remain out there. For right now, by putting the 4 here, completes that 4th wave down. And I can push this out to the 4-hour chart as well, just so we can take a look. So we get 1, 2, 3, 4, looking for that 5th wave. And the 5th wave is the extended wave, because if we look here inside of 3, it extended very nicely. Whereas here, this is just a plain 5 waves up. So therefore, and it's not the shortest wave. Wave 1 is the shortest. This is not. But now we can add, we've got that for the minute 5th wave. Let's add for the minor 5th wave. So we'll put those back on as well. First, though, I want to just put in, we always do that wrong. I got to get it corrected. These are extensions, not retracements. So put it there, to there, to there. So here we have our extensions, our wave C, retracements and extensions. So again, 100% where intermediate wave C would be equal to intermediate wave A comes in at 45.56. That's pretty much standard because these numbers haven't changed. We're tackling the C wave. So the fibs haven't changed in terms of the intermediate degree. And here as well, if we get a strong enough push, we do have numbers that take us up to just a slight new high, right? In the S&P, it's 48.08. 1.382 would be 48.13. So we're pushing into a slight new, and it still would be considered irregular, just not really pushing too far above that previous high. And that would be January of 2022. So not necessarily looking for that right now, but there it is in terms of technical possibilities. So we have 100%. And so now we've got the minor 5th wave. I want to stick that up in there. And let's go to here, and we're going to bring it over to here. And let me clean these up just a little bit because I don't need all those additional levels that have already been exceeded. Get that one, that one, that one. That one stays, this one goes, and this one turns into 2.618. And then I go over to here and put it together. So what we have going on here is, go back down to the hourly. So we have that 100%. Now we're going to just check and see what we get going on here, where we have our clusters. So the high to beat right now is 4493.75. So we have 1.618 still right at that level, and that is the minor fifth wave. 1.618, minor fifth wave. So again, if it gets above it, will be okay. It doesn't mean that it's anything different, but it still remains right now as resistance. So 618 on the minute degree likely will be surpassed because we're looking for a new high above 94, excuse me. So that would surpass that. So the first one up is going to be that there's the equality where minute 1 and minute 5 are equal. And that comes in at 4528.75. Then we have 4556. So I'm going to call this 4529, 4557. Above all of that, we have the minute wave 5 coming in at 1.618 at 4,612 or 613, but in that area. And then above that, we start to get a cluster, and that's up towards 4715, 51 to 47. Well, we have their three levels. Oh, excuse me, 47, 15, 31, and 48. And those are reflective of the start on one of the, and that for the B wave, the first move towards above 100% is 1.236, and actually is not as functional because we're not to a new high. And so it's playing against where the B wave would become irregular. And that would be 1.382, which again is going to take it to new highs should it happen. But we do have 2.618, and those are going to be for the minor wave 5, and those are coming in at 4731. And then we have the minute wave 5 at 4748. So likely, but I would take the 4731 to 48 before I'd really be holding my breath on 4715. So yeah, I'd look for higher levels. So again, same deal. We're going to be looking for the development of the 5 waves of minuet degree to complete the minute 5. And so we're going to be looking for a 1, 2, 3, 4, 5. We'll be looking for, again, the third wave to be the most likely candidate to extend within this 5th wave. And we'll see what we get. And moving averages did kind of perk back up, but we still have them beginning to get themselves above the 200. They did. Got the 20s above it, the 50s above it, the 4 and the 8 are above it. Oh, pretty much above the 200. And now the 20 and the 4 and the 8 are trying to get back above the 50. That would be good news for the rally. If we're going to rally, that's what we need to see. We need our moving averages all to be in alignment to give a lot of credence to that type of a rally. I'm going to go back over here to see what these now look like. You can see that they are looking pretty good. And this was the one on the daily. So it was the 4-hour chart that they needed to get straightened out. On the daily, we're still looking good. And put in a not totally bullish bar, but we put in a decent green bar. And so There's a couple of possibilities on the daily for this, but a little bit too early to speak about. But right now, we can see we have things going back into alignment. So there's a 200, the 50, the 20, and then we get up here, and the 8 and the 4 is up there somewhere. Here it is. Here he is, way up here. So they are looking all in alignment, back in alignment on the daily. And that's good news also for continued upside. So this is where I'm going to leave it for right now. All looking good. Let's see what happens. Tomorrow, I don't think we have any real economic data. Well, we've got the S&P Flash Services PMI and the Manufacturing PMI, the S&P Flash US, and those come out at 8:30 a.m. Eastern. And very early, St. Louis Fed President Bullard is speaking, and according to this, 5:15 a.m. Eastern Daylight Time. Now that I'm wondering where, he must be speaking maybe over in London or over in Europe somewhere. That's pretty early to be talking in New York or even on the East Coast. And then we also have Cleveland Fed President Mester. He speaks tomorrow at 1:40 in the afternoon. And that is going to take care of this for me for this week. And the next update, there will be a couple, but the next Elliott Wave update will be on Sunday, June the 25th. Hopefully, I'm not sure I'll be able to get it accomplished, so it might also be on Sunday the 25th, will be a big picture technical update. And that would be on the S&P and the NASDAQ, and maybe also the bonds. So I'm going to wish everybody a really great trading day tomorrow. Have a great weekend. And the next update will be for the Elliott Wave on Sunday.